There's a lot happening all over the world, but we're still tracking the numbers that affect the economy. Let's see what we expect to happen this week. Before we begin, remember to like this video and subscribe for more economic updates. This week, we'll have our eye on two key inflation metrics, the Consumer Price Index and Producer Price Index for December. On Wednesday, the Labor Department releases the Consumer Price Index, which is projected to have accelerated in December for the third straight month. Economists expect annual CPI to come in at 2.9%, which would be 0.2 of a percentage point faster than the rate in November. As for annual core CPI, which excludes more volatile food and energy prices, economists are looking for that to land at 3.3% for the fourth month in a row. Price pressures at the wholesale level, which are gauged by the Producer Price Index, are projected to show even greater inflation stickiness than those at the consumer level. On Tuesday, the day before CPI is released, the Labor Department is expected to reveal the headline PPI increased at a rate of 3.5% year over year, a full half point faster than the rate in November. Annual core PPI also is projected to have sped up significantly last month, with economists looking for it to land at 3.8%, 0.4 of a point faster than the November rate. Other key data releases we'll be watching this week include the National Federation of Independent Business Small Business Optimism Index for December, which will be issued on Tuesday. Economists expect to see that the index came in at a measure of 101.4 last month, which would be 0.3 of a point below the number for November, but the second month in a row it lands above its historical average of 98. November's surprising reading of 101.7, which is 8 points higher than the October number, was attributed to a sudden wave of confidence in the future that Federation analysts say was sparked by the re-election of our former president. The November reading is the highest since June 2021 and the first time since December 2021 that the metric has come in above its historical average. Later this week, we'll hear from the Census Bureau with numbers for retail sales in December. The government's report, due for release on Thursday, is expected to show that sales increased 0.6 of a point last month, 0.1 of a point less than in November. Excluding auto sales, which is done to get a clearer look at underlying demand patterns, it's projected that retail sales rose a half point in December. That would be 0.3 of a point faster than the rate in November. Finally, on Friday, the Census Bureau will return with an update on the condition of the housing market when it releases the numbers for new residential construction in December. Economists project that housing starts last month came in at a seasonally adjusted annual rate of 1.33 million, which would be about 40,000 more than in November. More recently, housing starts have stayed above the four-year low of 1.23 million units recorded in July, but remain below their historical average of 1.43 million units. Of particular interest to many observers this time around will be to see where the numbers of multifamily housing starts landed in December. In November, new construction of multifamily projects tumbled 24%. Which analysts cited as the principal culprit of the overall decline in U.S. housing starts by nearly 2% that month. That's it for now. Join us again on Saturday to see where the numbers actually landed. This is Devlin Steele for Augusta Precious Metals, signing out.